Now, as of right now, filming this video, QQQI, or the NEOS Nasdaq 100 High Income ETF, is trading down below not only my average cost per share, but actually down below prices that we haven't seen in a long time. But honestly, not only trading at prices that we haven't seen in a long time, but basically trading at all-time lows. Now, this is of course due to the broad market sell-off. The Nasdaq is down over 6% year to date as of right now. But in this video, I want to talk about the NEOS Nasdaq 100 High Income ETF and why I'm adding more shares to my personal portfolio at these levels. I want to go over what this ETF has done so far as all-time performance, explain exactly how this ETF works, and how much income generation is truly possible with a higher income focused ETF like this one. So if you're an income focused investor, a dividend investor, stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now just to go over some of the basics, the NEOS Nasdaq 100 High Income ETF, or ticker symbol QQQI, is a monthly paying more income focused ETF that has a distribution rate of over 14%. The expense ratio for this ETF is around 0.68% because it is actively managed. And speaking of the management of this ETF and the strategy, the targeted benefits of this ETF strategy says number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the Nasdaq 100 index and implementing a data-driven call option strategy. Now, because this ETF is going to be investing in the constituents of the Nasdaq 100 index, this index is made up of growth-heavy stocks that are a little bit higher beta, which not only means that there is more income potential because of the option premium, because there's more volatility, but also this index, at least in theory, can drop and also rise a little bit quicker compared to other things in the market. Now, for that reason alone, this ETF is not going to be the lowest beta ETF with an income-focused strategy. But if you're willing to take upon the risk of having some exposure to the Nasdaq 100, which I personally am comfortable with doing, at least in part of my portfolio, investors at least so far have been rewarded nicely as far as the distributions go. Now, number two, it says actively managed by NEOS. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, income-focused ETFs in the past have been sort of frowned upon because of the tax implication, but ETFs like this one at least are actively trying to make it more tax efficient, and on top of that, trying to return some of the distributions, if not all of them, in ROC, or return of capital. Now, lastly, it says the fund utilizes a call option strategy that may include both selling and purchasing NDX index options, which also provide the opportunity for upside capture in rising equity markets. Now, this is important, especially for an ETF that utilizes covered calls. If you look at the price of the NEOS Nasdaq 100 ETF as of right now, it's trading down pretty low, significantly lower than it was just even a few weeks ago. Now, because of the covered call overlay, the upside is going to be somewhat capped, but because this ETF at times can buy index options, even though it might not necessarily grow as fast or recover as fast as the Nasdaq 100, it has a chance to regain some nice ground. Now, the overall investment objective is very important for any ETF, and this is the main reason that I'm adding more shares of this one in my personal portfolio. It says the NEOS Nasdaq 100 High Income ETF seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. Now, for me personally, in my portfolio, at least certain positions in my portfolio, I don't really care if they grow like crazy on a yearly basis. As long as they're paying me income consistently, which this ETF at least has historically, I'm going to be pretty happy. Now, speaking of income generation for this ETF specifically, we're talking around 59.60 cents per share per month, or at least that's more or less what we've seen so far since inception. Now, just to visualize how this ETF has performed next to QQQ over the max time frame, that QQQI has been trading on the max time frame using total return as a metric. So this is price performance, price return, plus dividends, distributions included. Now, on the max time frame, as of filming this video at least, the NEOS Nasdaq 100 High Income ETF has actually outperformed the Qs by a small margin, which is impressive, again, because the Qs are very hard to outperform, at least generally speaking, which means an investor wouldn't necessarily be better off buying into one or the other. The biggest difference is, of course, the Nasdaq 100, generally speaking, is more growth oriented, so buying into QQQ is going to be more of an income play. Now, if we take a step back and look at all the dividend payouts over the last year or so, it says right here QQQI has had a dividend yield of 15% more or less and has paid $7.37 per share in the past year. Now, with the 14 or 15% yield, that means that it's only going to take a few years in theory for this ETF, at least based off of the most previous payouts, to completely pay back your investment in full. Now, that also means that for every $100 that you invest into something like this, you're more or less going to be receiving $1.20 in distributions the following month. Now, in my long-term portfolio, I have of course been stacking tons of different stocks and ETFs for several years now, going on almost a decade. And in the last year or so, I've stacked around 300 shares of ticker symbol QQQI at an average cost of around $50 per share. And now with this ETF well below my average cost per share, I have, as of recently, the last few days, been adding some more shares to my portfolio. Now again, only time is going to tell what's going to happen in the future, but this could be looked upon as a great buying opportunity for not only this high income ETF, but tons of other assets across the markets. But for me personally, my strategy is going to stay the same as it's always been. I'm going to keep buying a few shares of this, a few shares of that every single trading day, dollar cost averaging over a long time frame, because of course I'm a long-term investor. So now that we talked about and went over the NASDAQ 100 High Income ETF, and I shared with you guys what this ETF is, how it works, etc., I lastly, most importantly, have a question for you guys down below. Are you currently adding shares of the NASDAQ 100 High Income ETF to your portfolio at these levels? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.